There's about 28 really relevant economic headlines that we're going to get to really quickly in this video. But first of all, what is going on with gold and gold prices and gold mining stocks? They've all taken a big hit. I'm going to get into that right now in this video and tell you some of the things that I told to the people who are asking me about this. A lot of people are worried about what's going on with gold. And what do I always tell you, especially with gold? Just wait. It's going to be fine. It's not going anywhere. There's been a recent period of weakness in the mining companies, price of gold itself, as a result of the American dollar getting stronger. But the entire setup of the earth right now, with what's going on with all these possible wars and the insecurity, there should be much more of a price premium on gold right now from that standpoint alone. The demand trends also suggest that the price of gold should be a lot higher. What he says is that First Majestic has really been taking a nosedive. Is it time to be greedy while others are fearful? Or should we avoid entering a new position? You mentioned that you should look at the leaders of a company and see if they have a history of working at a company that they hit bankruptcy and now they're at another company. You should be avoiding them if they're doing what they always tend to do. A CEO who has overseen a bankruptcy is much more likely to have to oversee another bankruptcy. You also mentioned to be a good trader, you need to cut your losses quickly. I should have listened to your advice as well. Let me read to you what I wrote back to Jamil. Hey Jamil, we're seeing this across all gold miners. Some inflation reports surprised to the upside. So now investor expectations are that inflation is coming back, which means the Fed will need to raise rates more or possibly keep them elevated for even longer, which is bad for gold. In my opinion, just about every gold mining stock is at bargain levels right now. By the way, I should probably mention here that anything we say in this video is not intended as personalized trading advice for you. And hey, I've got a free gift for you beneath this video in the description. It's the full Leeds analysis checklist, what we look for when we're looking into a stock for analysis and review for our newsletter. So if you want to get that gift, just go down to the link below this and you can download it and use it all the time. Put any stock that you're looking at through the full Leeds analysis checklist just to make sure that you keep an eye on all aspects of the investment. A good investment does not need to check off every box, but you have to consider every box to make sure that you're not missing anything. That gift is yours, free. Just go down and click the link. You get it instantly. I'm not trying to sell you anything. General Motors cuts 500 salaried employees. In the big scheme of things, that's not really that many at all, considering how big the company is. But I want to read you one of the key points from this article. General Motors is cutting hundreds of salaried positions as it follows other major companies, including competitors, in downsizing headcounts to prevent cash and boost profits. And I haven't been feeling very well, so that's why I've only put out one video this week, but I got to get to this even though I don't really feel like doing it right now, so I might be a little bit low energy. Home price gains weakened sharply to end 2022, according to the S&P Case-Shiller. Unless I say otherwise, these articles are all from CNBC. Prices are now 4.4% below their June peak. As Peter Leeds always says, just wait. Biden tapped CEOs of 3M, CVS, FedEx, Citi, and others to join his export council on trade. Mortgage demand from homebuyers drops to a 28-year low. Mortgage demand fell for the third straight week as interest rates increased. Mortgage applications to buy a home dropped 6% last week from the previous week. That's 6% in a week. And the more of my videos that you've seen, the more you know that I believe that real estate prices are going to come down pretty significantly, and now we're starting to see it. China's factory activity grows further, marking its highest reading in nearly 11 years. China's official manufacturing PMI hit 52.6 in February, above the 50-point mark that separates growth from contraction. So China's economy is heating up again, coming back a little bit. Problem being that they're not really in our good books, we're not in their good books right now. So the strong growth in China over recent years has been helping the entire global economy. So it's good to see that that growth is back, but it's underneath a different guise where we're actually in a standoffish kind of phase with China. A lot of our manufacturing activity that we're farming out to other countries instead of China, now we're getting Mexico to do it, Laos. There's a move away from reliance on Chinese manufacturing, which is perfect timing with this whole possible world war that we're going to run into with China. Target leans into affordable joy and its cheap chic reputation as sales slow. Retailers across the board are having trouble. There's going to be more wind in the sails of companies like Walmart that sell discount things or dollar stores, cheap goods, because people are having a lot of financial hardships right now, so they're going to start looking to the lower end of the retail market to buy the things that they need. And Walmart's fastest growing portion of their consumer base is people who make six figures a year. That is the fastest growing portion of the consumer base for Walmart. Norwegian Cruise Line shares fall 10% as soft outlook and wider losses eclipse strong demand. It's a gutsy play right now to invest in a cruise liner or a cruise company, especially when we don't even know what's going to be happening in the world a few months from now. You don't want to go on a cruise when a war breaks out. There are so many downsides to cruise liners, even just like when I say I never invest in airline companies because there's too many things that can go wrong, not even including the stuff that comes to mind first. But there's mechanical issues, there's worker strikes, there's new governmental regulations, there's weather-based cancellations and difficulties, and that way they're having trouble getting enough employees to work the check-in desks, to work the baggage handling. An airline is such a consistently, endlessly, bottomlessly expensive thing to be involved in. And one instant second, something can happen that tanks the value of the shares that you own. I never go near investments in airline companies. It's my personal thing. That's just what I do. What I don't do. Novavax shares plunge as company raises doubts about its ability to remain in business and announced plans to slash spending. The company lost $182 million, or $2.28 per share in the fourth quarter. That's $2.28 in a 3-month period, not a year period. And this is a company making vaccines while we're going through the Spanish flu 2.0, another iteration of a worldwide pandemic. And they start blaming things like, for example, companies will need to change their vaccine each year to match circulating strains as required by regulatory agencies, including the U.S. Food and Drug Administration. And they say that's why they're having trouble operating, functioning, how they're having trouble staying in business. Its shares traded as high as $330 per share, more than $20 billion market value. They have since lost more than 97% of their value, trading at around $9.30 a share. In the U.S., where a Novavax vaccine was authorized in July 2022, only around 80,000 of its shots have been administered. I did some quick back-of-the-napkin math. If you look at how much money they're spending, they're looking at over $5,000 per shot that they've administered. This company is being run horribly awfully at a time when everything is going in their favor. The very point of their business only exists because of this unique time that we're in, where it's required to get this kind of vaccine. Thank you for being here. My name is Peter Leeds. Along with my entire team, we publish the world-famous Stock Pick newsletter. Now there's two videos on screen. The bigger one, the main one, is about the U.S. debt ceiling. As we get closer and closer to that becoming a very relevant thing, it's a great idea for you to take a look at what's going on with this absolutely different debt ceiling debate than anything we've seen before. The other one is chosen by the YouTube algorithm, and it's showing you what they believe, based on your viewing habits, will be the #1 video that we've made that you would really enjoy.